Welcome, and today's date is Tuesday, the first day of December 2020. My name is Derek. This is the Money Charts channel. All bets, trades, and within the that's each his own risk and their own reward. Taking a look at silver on this channel and very, very interesting things worth covering. So let's get started. I got some Fibonacci lines in, representing what was a 38.2, 61.8, and a 76.4%. From the big highs at the start of the decade, previous one. And the multiple hit support, but the one from this level here of $11 and change. So within it, fantastically doing what it usually does. It didn't resist this. And it doesn't mean because it's there, it's going to resist it, but if you do the if else is if you don't resist it, you do your resistance thing else. Well, usually it's a concise, fast move to next key level, check mark. And just for fun, I don't know why it always does it, but if it just barely comes close to it, it usually does a bit more. I call that piercing extra. Very rarely does it do pierce less. So now it has this fast move telling us that it's going to be taking a move to 28.28. I mean, it could still make it there, but it hasn't done it yet. And with the action that I've been seeing over the last 30 or so hours, this could get very, very interesting. I'm going to do different levels of Fibonacci, and well, the next one, I'm going to move it on to this one, which is the futures exchange market. I got different Fibonacci lines in here, which represents the high from up here and then the most recent low. And when we take a look at this on the daily term time frame, the breakdown in here, we can see starting. I was so close to doing it. The day before this happened, I was going to be like saying, it's going to happen, guys, girls, whatever. I don't usually say guys and girls, but on the 25th, before this was happening, I was ready to make a video stating we're going to go to 20, we're going to make a pierce below 2086. We're going to probably go to 20, maybe 20 and a quarter. It's going to happen soon. And then I would have stayed yesterday. Yep, here we are. It's the start of this move. And it can still happen. It still has to defeat this 18 average in here. But as I look at things furthermore within the shorter term time frame and how this played out, you know what? And I said yesterday in a preview video, if this is a failed breakdown, this could be very interesting. And oh my goodness, it might be. I mean, it's not guaranteed to do so. As you've seen on the daily, it has to break that 18 highs. And we can still pierce extra resisting the 2394. Right now, pierce less as of now. But since the 6 a.m. time frame on yesterday's session, every single period has been a green candle up. And there's been like 6 or 7 of them. We're on number 7. And it's pretty much over with 29.24 with a decent gain of 1.5%. So phenomenally moving, to say the least. And in the hourly time frame, just a phenomenal run, just really hardly getting any resistance at all. A little bit here at 22.70, a few hours here at the 23 number, or close to 23, 22.96. And maybe we're getting a little bit now. We had an intra resistance period at the 7-hour timestamp. And you can even say at the 4 and 5, it went up pretty much, but it barely went up. It didn't have much movement. And phenomenal moves on the 6 stamp, and then phenomenal moves on the previous one at 8 o'clock. Right now it's 9:41 as I'm doing this. And the volume, well, I guess the volume is time related, so I'm looking at that. But even still, look at the volume today compared to, well, there's some decent volume in here. That's November 24th, though, too. So the sell-off did come on very low volume compared to this rally. That's very, very interesting. I'm just looking at the volume now for the first time. What's going on? Why? I mean, that's not really this having volume. This is just not having any volume. I don't understand this. Maybe I should take a look at the volume on the other one, see what happens. Well, that looks a bit more normal. But as it goes, I'm going to want to use my drawing tool on here. So I'm going to use a different exchange just because I want to keep my Fibonacci lines. I'm just going to push the right click, remove drawing tools, which would remove the lines. So we'll come in and do this in here. So as it goes, there was some pretty big support here. We can see within this line, pretty much here. And then again, it had a small pierce below down to here. So as it goes at the time, you were supporting this at 5 o'clock in the morning, November 24th, and just showing all your weakness in here within, just not making anything within the 18 as far as breaking out. You finally have the breakdown session, 5 a.m. on November 27th, which then took you back to where we came from. So at that point, usually what I'm thinking is this is weak support. It's one of those, oh my goodness, we could continue falling from here. We could bounce. We could have like a nothing move, which is what happened. A nothing move, which is the 3 periods in here. But this isn't good for the market. Well, I mean, for the short term and the next, meaning it's good if you know you're going to be betting. It's going to be good. It's going to go to 20 and something. Well, it didn't. But as it was breaking down, the 21 stamp and the 1 hour stamp, and then you have the 2 sideways like this. This was telling me, oh boy, we're going to it. And if we come up to here, yeah, maybe we might resist this line or this line. But we really didn't resist much within this line or that one at all. Again, when we look at this on the 1, we're seeing situations where you come up to it. I don't know why it's doing that all the time now. And then there's your consolidation. So after you have any type of down move, it's how you react to it. So within this down move, it has that consolidation. Now it's talking your short-term Fibonacci from this low to this high. And as it's falling, you can see as it's breaking down below 61.8% from that level, even 76.4, that it's telling you that this is a failed move, and we're going to probably have another leg lower, or leg lower. And that's what it had. And there's the leg lower in here. Now we have the same thing, so this high in here. So now at this point, it's able to hold that move. And thus now there's still there's multiple Fibonacci's that are important, but you add another one to the one you were just doing. The low from here and this high. But now you have this high and this low when it's doing this. And around here, it's now breaking the Fibonacci and showing you that this move is a failure. And at the same time, it's also telling you that within from here to here, that you're able to get a breakout and have extension, and thus you can look at other longer term Fibonacci's, and then there's Fibonacci upsides and different things that would come into play. And it's also telling you that it's going to attempt to revert the trend, and in doing so, it's been doing a fantastic job, as it did spend many periods supporting this area where it was resistance. And that can still be resistance for, if this green candle was a big red candle, and it very easily could have been, then the whole subject at the end saying afterwards, if we would have done something like this, is, yep, we came in here, we made this low, we resisted former support, and then we went down. But of course that didn't happen. And what is happening is it came to this area, and instead of, it resisted it for 2 periods, and then it supported it for like 4, and then it took off. Those would be, and then that's just how it is right now. And you come up to here again, you don't resist this level, and you just kept on going. So fantastic moves. Therefore, the move, this one is what's going to determine to me failed move, fast move, and all that stuff. The lows in here is this whatever exchange you're using. Use those numbers. This is actually I'm looking. I thought this looked like 4 digits. I'm looking at 1752. Something. Why am I looking at gold? Because I was looking at that number up here that said 1752. But now also different exchange. Well, it's not gold. But anyway, take the lowest low. I'm going to take the lowest low in here. You'd be doing. So in this case, it's $21.90. Right now, and it's just going to probably keep going up at this point, because at least it's not going to be this. It's going to, usually isn't. It's like 5% or lower. High is 23.72 right now. And as it has its retracements, you'll just notice how interestingly the 23.6, the 38.2, the 61.8 is always going to play out. It just usually always does. And if the 61.8 falters, you see weakness amongst it, which would mean something like if this is the high and then it starts to come down, And then here, at this point, this would be near the 61.8, but I don't know what's going to happen now. I mean, it could just bounce up higher from here. But then you could have something like this, and now you're starting to see weakness amongst that area. It had that area of support in here. And that gives you the scary signs that, not only is this going to have a leg lower, but it's having a leg lower amongst what's been just a bunch of indecision, choppy, failed moves up and down. Because it looked like this was going to be the sell play. And really, it would be based on the stuff I showed at the start that, okay, we came to 18 average of highs on the daily term, breaking down. It's just a high volatile move. And we probably have a decent size, like 6, 7, 8, 9%, 10% down move over a 1 day, 2, 3 day period. But if this last move is a sell, that sell is a fail, and we take a look at this for the potential for where this would come into play. On the daily term, we would probably see any fast move. I would enter at least into here, but I mean, not really. You could even go further, but that would be the next extended target. Now, we could easily come up and it could be a level of resistance, and we could either on three things, it's a level of resistance. I say both bullishly and bearishly something could be resistance. Well, bullishly it could be resistance, which is something like this. And bearishly, it's resistance. Well, that's obvious. If that's a high and it just could this be a high? And I don't think it will, but in any market setup, if you don't know what's going on fundamentally, and even on the intermediate term, it could be, of course, still. And then you have resistance, and then you just go like whatever down. Maybe you go like to 16 or something. That's being bearish. Now, being neutral is just spending a lot more time in this range. And the range would be we've established support around the 22 area. And we're doing a good job establishing it near 26. So we would just have what would be a third hit, because this is number 1, and it had a couple situations in there. This was number 2, and almost a second at 24. This would be test number 3, and then we go down and then up and stuff like that. But breaking out above here, and if we don't, basically you're supposed to find resistance where you came too many times and and you had a healthy large run to get there. And that would be the case, of course. So if you don't find resistance there, and of course that would take us to the 18 average of highs again, then you'd be having an excitation and an attempt to get this thing back and going on the longer term time frames, and at least on the weekly term, which is thus long term. And in a situation where you have the failed breakdown here that presented this fantastic up move, and now it's in the middle of correcting it. It corrected it within the high end area for roughly a month and a half or 6 weeks. And then it's been doing it here since the start of September for, basically the entire autumn, or the fall solstice northern hemisphere. And I say northern hemisphere because it's actually the spring in the south, and the vast majority of the people are from the north watching this. But hello to people in the Aussies in South America that are watching it, although there is very few. So getting out above this is a seriously large situation. And I'm going to go back to this chart here when we go to the monthly. Albeit the Fibonacci lines will be very small, as just a little crunched up, and not so much. But in the spot here, if we were to have continuation, I mean, this is all those things that I've talked about as far as reversal of trends, going and attempting stage 4. What you need is the market from a downtrend, which this is a downtrend, to correct itself through time, go sideways. And oh my goodness, did it ever do it with, we'll even say 2 failed breakouts. Failed breakout number 1, and failed breakout number 2. And even then, you can say, it's a successful one because it had its correction, albeit its correction did make a new low, so I call it a failed one. Either way, it was all part of the sideways consolidation when it had its highs and it had its lows. And then this next step is to break your resistance of those sideways resistance levels and establish a high, check mark. And on an official level, this is going to be a check mark again, but you want to come back to the 18 average, which is what it's done. Unofficially, not so much here. Decent sized single move down and a single sideways consolidation within that move. And then more so, mainly because of, a lot of it's the time, of course, but time is in this was a rising 18 highs. As, of course, if this 18 average of highs was priced back where it was here, it would have hit it. But enough to state we've had the correction within it, but the next stage is to break it. So as it would be doing all those things I mentioned, breaking this resistance, it would be stating, okay, we're attempting to get this thing back going. And when it breaks that resistance, you'd see a big green candle moving up 2648, 2670. Fibonacci retracement would be big from this low to this high. Once it takes out the 61.8, oh my goodness, that's fun. And I should calculate that. I should calculate that and put it on one of those exchanges. So let's do that. And we'll do the first one that I did before. And I also plan to look at the gold to silver ratio too. That was also part of my plan, which is also stating that, it looks like silver might go up as well. But I'll do that. And if I forget, which I did one time on a crypto video, and I'm probably not going to, but if I do forget, then you can take a look at it. You should see that it's looking to break down on the downside pretty nicely, but I'll get to that in a bit. So high divided by low. What was the high in here? $29.86. Let's get my... And I want to divide that by the lowest price, most likely with a breakout price, and I'm going lowest right now. 21.66. I'm gonna look at 23.36, but not put the line in because it's the first level, it's the first breakout point, and it usually is support after it hits it. And we can see it was just that. And that's really what makes it interesting here, because within the 23.36, you can see that's the area is consolidating, breaking down within this stamp, and then just to quickly reject the sell-off like that instantly. And that's not a bearish sign. I mean, yeah, it could still happen, but what you'd rather happen if you're going to have a move is for it to happen within, like, one, you want to go down a bit lower, maybe even touch this mark. And then you want to do it over a span of like 2 to 4 periods to get to that level. And then, well, it doesn't matter if it's 2 to 4 periods going down or back down or 1, but a lot of concern for the shorts. I'm not concerned for them, but if I was, I would be concerned. Okay, so Fibonacci line number 2, the first big one is 24.5. So let's take a look at that. And I mean, it's an area, of course, that it's been resisting. I mean, there's so many different numbers in the area that it would anyway. But at least it gives you the guidelines on what the 38 and 61s all mean and what they all do. So it's been a lot of consolidation within that over the last couple of months. And the 2641, that would be the large shorter term, intermediate term number now. And of course, it just happens to coincide. And a lot of times it does. Interestingly here, I mean, this was a spot where it pierced less. This is just more of that failed breakout that it had. And that's really what that tells me, because, yeah, it's fine that it pierced extra, did what it did here. Then it's, and you even say this is a moderate failed one too, in the sense that, okay, we get a little bit up, come back, this is where it's supposed to break out, it made its move down here. But this was a serious spot where it should have hit and went to that line, and it didn't do it. And maybe you can say pierce less, it's just that doesn't happen often. And then back to this previous level, pierce, and this one is more common to pierce higher though, but yeah, and spots like this, when you have a failed, and I've seen this happen a few times before. Bitcoin recently had something similar to this too, and it violated like I thought it would. If you have a failed move where it looks like you're going to go to a line like this and it does something like this, and it ultimately doesn't make it happen on that play, meaning you correct within this and break down. I mean, if you correct within and break out, fine. Because there's a correction, there's a breakdown. If that next play before that is a failure kind of deal, even if it's not a failure, if it just, it's going to be a failure. But if you're relatively quick in time, and it could be 20 periods in here, 30, 40 periods even, so it doesn't have to be too as long as it's not a long, long time, and you come back to this, then you usually not only take this out, but you're probably going to explode through this number, and we'd be talking about playing probably previous high, but even like 28 to like 30 base, 29 and a half as the next key resistance it would have on that next point. But even more so to that level, you're talking about a serious spot, just like Bitcoin is now, of a major key point that it's very fragile in taking out. Because if it goes up to here where resistance looks to be played, it's like, I don't know. I'd be kind of scared to sell in any type of game where time means everything. If it goes up later and I sell, I lose. If it goes down later and I sold, I win. And then, yeah. And when I say that, it means it has to get to the point where if it goes down to like here and I wouldn't buy, then it goes up, then that's still a loss. Because in the whole game of that, why would you want to sell and buy back kind of deal? Well, maybe you want to sell here because you want to buy it back in here, say, or wherever, maybe down to 20. So you sold, it goes down, you buy, you win, and you're able to get your deal. Maybe you turn like 50 ounces into 70, or maybe you got back 50 at a fraction of the dollars that it cost you before. Thus, the differential of the two is your profit. Yeah, that can be done. And then, of course, sometimes you're in a situation where if you're using it as far as life investments are concerned, I think one of the trickeries, one of the best ways of distribution is you want to do so when the markets are phenomenally high in price. That's the way I would think anyway. I'm going to bring in this exchange now. And to me, at this level, we're not even close to that. Even when it's up to 28, the price is damn cheap. Even though my buy average for me is most certainly, in US dollars anyway, pretty much around this line somewhere. I mean, a lot of my buys were in here. Yeah, I bought a bit up here, and I bought down in here, and I bought down in here as well. And I just most recently bought in here. Well, recently, we're talking the monthly time frame recently, within the last month ago or so, yeah. And then even before then, I was buying a whole bunch because, well, cryptocurrencies helped me within it. Daily Fantasy, DraftKings helped me within it. And the prices were cheap. But when it gets expensive and you say you come up, oh, it's up here. And I'm the type of thought process, what do you need in your real life? Maybe you want to just spend your normal everyday things with silver that month or this time frame, or just turn into cash, and then that cash buys your groceries and buys your gasoline and whatever else you buy every day and every week and month kind of deal. And then there's even different things that I think that if you know you're going to be buying something and you're waiting because you have, I don't need it for 8 months or 2 years, but I know I'm going to need it. And obviously you get situations where, okay, well, this spot like this, say it goes up to 130, maybe I'll take a bit of it, sell it, and buy that item because I know I'm going to need it. Now it's a deflation pretty much, because the likelihood that I'm getting a value on it when I'm selling my silver at, say, 134 or whatever it is at that time. So that is one of my ways I think of distribution is, when it works out for you, the things that you've been wanting to buy and needing to buy, it's just so obvious. And now the key word is the want. You can really fulfill a lot of those dreams, fill bucket lists and stuff like that. But I think it would be like 130. Would I really want to sell much there? No. But would I want to sell some? Yeah. And then one of the things I want to sell it, and I almost forgot, I'm glad I thought it this way, is the gold, to buy gold. And so I mentioned I was going to show the gold to silver ratio. Because when this thing gets crushed down, and I'd be like, okay, yeah, let's take a little bit of silver, turn it into gold. Start doing that near the 30 when it goes below 35, like below 40. And really, I'm thinking about that 32 number. And then around 20 to 15 area is the next one. I know you can't see it on here, but 20 to 15. And then the next key area for me is around 10. And then does it free fall from 10 to 1? And at 1, it's almost when I talk about any type of trading in markets, and what's the most extreme point? And let's have some fun with it. And if I was to play that on, say something like this, and I really have to go maybe like that. You get to yourself and, okay, this is just whatever market. Let's just assume that you think that this is way, way, way too much. It can never, I mean, this is the most it go. I don't even think it's going to go there, but if it does, holy crap. Well, it means that, okay, I sell a little bit here. Then it goes up here, and I sell a bit here. I sell a bit here, and I keep on selling. But at this point, I've already planned back here what I'm going to do, selling here, 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 and here for the most part. So I know that I should have around this much silver here, this much here, this much here. Now I'm hoping that as this market goes up, there's still be enough time where I can accumulate more, especially with Bitcoin and cryptocurrencies. If cryptocurrencies can have a fantastic up move that really destroys this up move, or if this doesn't even have an up move, then it's going to be very easy to accumulate more. And then when I realize a situation like this, I probably never ever sell out, because there's always going to be coins. I can't sell this coin, can't sell that. I got to keep that. Plus, I know, especially when you're doing well in financial situation and finance, that you want to have everything, so you never want to sell something to go to zero. And therefore, but it would mean that maybe I'd have less silver here than I do now. And oh my goodness, if I had what I had now then, which I probably wouldn't, because I'd be selling here and there, then that would be an enormous situation. But if you were right and you destroyed it, say you sold so you just have a small amount here, you sold the most you possibly could, and then you get a move that comes back down to here. Okay, now next thing you know, you had before, your silver storage was like this in your box. Now it's like this, because you bought more. Or you had maybe 78 units before. They could be grams, they could be tons. And now you have, say, 92 of those units later on. And that's really just a lot of the way that I play, just moving coins back and forth in cryptos, and just different, and just, well, whether it's cryptos, precious metals, dollars, whatever it is for, just try to increase your portfolio value more than anything. So, and I still didn't show what I wanted to show in the gold to silver ratios, which was the short term. Okay, so as it goes, okay, why in the world have we not been hitting 90.63? Why? I mean, come on, tell me. Well, I mean, you don't, and this you can. I'd love to hear the answer, because I do want to know, but I think I do know. Because it's a failed breakout, is why I think that's the answer. Now, originally here, I mean, it could have done it right off the bat. I mean, that's how volatile these markets are, but I mean, higher highs, higher lows, correcting within the moves. Hey, that can happen. So you come up to this point on September 24, and then you run into this sideways consolidation. But at the same point, you're also making lower highs and lower lows, matching lows along the way. Well, one lower low than matching the rest. And then just consolidating, completely chopping within the 18 average. And you got to keep that in mind, that this is still, oh, we've got a failed breakout. Yeah, there was a failed breakout here. Failed breakdown here, failed breakdown here. Now it's attempting to break down again, possibly. But again, why haven't we in here or in here been working towards making it to that 90? It didn't do it. It's just showing no momentum at all. For the same reasons I was going to be saying a couple of days ago, I think silver is going to be heading down. And, well, I mean, it still needs to do a bit more work to show the kind of same thing, but not much more. You see this thing starting to break down from 70, below 75? And noticeably below 70, basically 74 3/4, 74.8. And then you see it even further if it's not showing well at the low 74, breaking down below that to 73. Oh, wow. Yeah, it's probably going to have weak support here if we have much. Meaning we do this type of movement there again. Maybe we rally up to the 76.5 at best. And then it's just going to go lower. And on the weekly chart, well, I mean, this would be a successful down correction if it leaves as an excitation of the 18 average to the downside. And when that happens, that's probably because silver's kicking ass. Meaning you're having silver up like 6.5% when gold's up 1.8. Silver's up 3.9, gold's up 1.4, or hopefully, and this would be cool. Silver's up 17.7 and gold's up 4.5 or 5.5 or something like that. And yeah, I don't know if I wouldn't always want that when I have the supply that I got. But I mean, it's kind of like, yeah, but at the same time, can we just wait a bit and have cryptos go up to 30, 40, 60,000? This whole coin go up there, and then I can sell it into this gold and silver there. Then we can have this gold and silver go up. But you know what though? The markets do whatever the markets do, and the best for me is to always adjust and act within the situation. Act within, okay, this is the price, only price pace. So is there anything I can do within these current prices that is good for my portfolio? And within the silver, does that mean if you're playing the paper markets, then you do whatever it is within that game? And heck, if you do that within the physical game as well, you're like, okay, I got my physical supply, I got my bars, my ounce, my rounds, whatever it is, I got this, that in the physical game. And I also want to play the market on this way in the derivatives form and like a casino or like poker, all that stuff. And yeah, if you good luck to you, and hopefully it can work out. And there's definitely ways you can profit big on. Then you can use that to buy more silver. You can use that for income and all those sort of great things. And of course, part of your diversity. But to me, whether you're playing silver on the paper market, or you're playing gold, or you're playing Adobe stock, or the Dow Jones, or any cryptocurrency and stuff, you're just trying to make a gain for the net result of cash purposes. So what's the difference between silver and gold and those? Well, which one gives you the better income? Maybe you're still familiar with silver, you want to trade it because you're looking at it all the time and that's your specialty, and you know what, that can work out. But yeah, I think if this thing is going to break down, that we would probably have a relatively fast move to 50. That would be my pick. How many periods would it take? Probably do it in a couple or 3, so 4. So with early into 2021, I mean, I could almost make that's like a prediction I can almost think looks solid and probable. And one way of looking at this, and I'll finish the video talking about it this way, is if I say there's a move to 50, what would be the even keel move on the upside? Well, a move from 50, and we'll even say if it's at 75, just to make the math easy. Say if it's, so let's just say if this thing falls down to 75, that's what I want to say. Yeah, so it falls down to 75, that's when I like the short, basically, to go to 50. The move from 50 to 75 is that of 50%. So if I take 75 and take 50% of that, or half of that number, that's like 38, 39, so that's like about 118. So I would be thinking that there would be a better chance, by far, as it's breaking down, that this market would pierce below this level than it would pierce below previous high. And even now, I think that there's much better chance of that. And then when you look at things like options markets and you can see the numbers, and I was intrigued and I never really got into it, and I made very few option bets back in the day. And back in the day now is like over 10 years ago, the 2009 probably, that there could be interesting ways where you could just probably destroy it on a number-based system for profit. When you look at, okay, we got this like for 3 months out, and this, I got an option for a put or a call on this, and I can, oh my goodness, the math is good here, and so on and so forth. But I personally don't care about those, but I know there could be profit. Again, that's like part of the paper game, and it's, to me, it's exactly like playing fantasy sports and poker online or live poker. It's a form of gambling which can have an edge if you know what you're doing, but that also goes to show you that if you don't know what you're doing, you're playing against other people that do know what they're doing, and they're going to be kicking ass. And I know myself, I don't play poker much anymore because it's just not a fun game, but I am playing daily fantasy, and I am kicking ass on that game. So if you don't go in there with much, I'm not going to say enthusiasm, but if you're just not that good, there's good reasons for that, then I'm probably going to kick your ass at the game. Thank you for tuning in and have yourself a great day. Bye-bye.